Welcome back guys, Harry here, known as Tradesharpe, and in today's video we're going to cover something super important. What we're going to cover is break of structure and how that may not be as important as you think. Now a lot of you guys are like, no, that's complete BS. Break of structure is important. The way that I've learned break of structure makes sense, while in some cases it is, and some cases it's not as important as we think. So that's exactly what I'm going to cover in this video to make sure that you guys are experts on break of structure, and we go into the more advanced things of breaks of structure to really understand how it works and when we should be using and which one are the correct ones. So be sure to stick around to the end of the video and let's go straight into the good stuff. But before we start the video, and also before I forget, can you guys please do the YouTube business? You know the drill. Leaving a like, a comment and a subscribe always does help. If you enjoyed the content on my channel, consider subscribing. Down below is one of the best forex communities for free, which is my Discord group. Join there to get access to all my free resources, and also to message me personally in the group, ask me questions, share your charts and get updates. So that being said, let's flip this camera around and let's go on to the charts. Alright guys, so the first thing we need to cover is what is considered break of structure. So obviously break of structure essentially means when we have something like this, say we're in an uptrend and we break the structure here. Now break means, you know, people think that breaking structure is only a wick. No, it means when a candle closes below the structure, this is considered as a break of structure, right? When we close below. But how do we identify these structures? This is what people mess up in the markets, is they don't know how to identify structure. And the way to identify structure is simple. Let's say we're going on an uptrend like this, we're closing candles bullish and we decide to pull back, right? If we pull back and create something like this and then continue bullish, right? And then the next candle comes and breaks below here like this, this is not considered a break of structure. This is just a break of a small zone that happened, right? This is not a break of structure because this did not create an important structural point. A real break of structure is when we're continuing on an uptrend like this and we create some sort of pullback like this, and after we create the structure we create a support. This is the structure that's created, and that would be a break of structure above this zone here. So the way to define a break of structure is when you have two or more candles closing. That is what's going to create a structural point. So when we look at this scenario here, we can see that these two candles closing bearish created a resistance, so that is considered a bearish resistance structure. And then these two candles closing bullish created a support, so this is our structure from here to here. So in the future, if we end up getting, right, if I draw this something like this and we end up having a support here like this, if we end up getting bearish candles closing towards the downside like this, we're still respecting. If price comes down here and let's say rejects it, leaves a wick, we have not broken structure. Even if this wick ends up coming deeper, something like this, let me draw that nicely. Even if the wick is like this, this is not a break of structure, right? A break of structure is when we get the candle closing below here. All right, so I want that to be clear in the beginning of the video so you guys exactly know what a break of structure is and how to identify it. Once you understand those basics, now you must be thinking, okay, why is it not as important as I think? And the real reason why it's not as important as you think is because in reality, break of structures happen all day on the chart. Everywhere you will see is a break of structure, and this is going to mess up your trading, because if you're looking for buys and then it breaks down, you're going to say, oh, now I'm looking for sells. So this is why I want you to listen to the advanced part of why break of structure may not be as important as you think. And it comes down to this. So once you guys understand what break of structure is, it comes to understanding first of all what is your session bias. If you're looking for buys, right, and this is what is the next step, is how important the higher time frame is. Structure on the higher time frame no lower than the 4-hour time frame is going to be your best friend. That is where structural breaks are going to be relevant or not, is on the higher time frame. 4-hour plus, so 4-hour daily, weekly, that is where structural points are going to be very important to know. Is price breaking structure or is price not? That is going to give you a good indication of what is going on the overall market. So if we take GJ for example now, right, we could see that we had a structural point here and we also had a structural point here. Once price broke the structure on the 4-hour, that is good information to tell me that price wants to continue towards the upside. Once we found resistance and we see this structure formed, we know to continue up we should respect this structure. So once we get this 4-hour candle closing below this zone here, this is a great idea to give us continuation towards the downside. And same, when we broke above this structure here, this will take us up to the next resistance, right? So on the 4-hour time frame, it's great to look at break of structures because this gives us a good indication of where the market potentially wants to go next and if it's going to continue with an idea that we anticipate, right? So obviously if we're looking for buys, we want to be above the 4-hour resistance. So once we break that structure, we can find buys to the next resistance, right? So that is very, very useful. But the mistake people make is they ignore the higher time frame here and they go to the lower time frame. And when you go to the lower time frame, what you're going to find is that, look, we just identified the example here that 4-hour broke structure, right? Here's our resistance. We broke resistance and upside makes sense here. We should be continuing bullish. But when you go and check the lower time frame, right, and we can take yesterday's scenario as another great scenario, right? So if we rewind to yesterday when everything was bullish, right? Yesterday everything was bullish because the 4-hour broke structure, we were continuing up. Everyone looks at this areas here, structural point here, structural point here, and they're like, price broke this structure, we should be continuing down. What ends up happening? Nope, not today, continues up. The same thing even happened today on the chart, right? And this is where you get messed up with break of structure, because this break of structure is not important. This doesn't mean anything. If the higher time frame is telling us to go up, we should still be looking for buys until we see 4-hour candles closing bearish or resistance formed on the higher time frame, or we see a kind of change of character which could be different, right? That's a different, I have a video on that if you guys are interested. So if we were to pull down, pull back up, then break this for a second time, maybe now we can start looking for those counter trend sells into this zone here. But this first breaks of structures here does not mean anything when the market's heading up. This is just a deep pullback, so don't be fooled by the initial break of structure. Always follow the higher time frame bias, right? Because this is where you're going to get your fake outs. You're going to get your fake outs when you're trying to trade below the first structure when higher time frame structure is bullish, right? Because everything, the break of structure, so the mistake that you guys are making is that on the 4-hour time frame, price broke structure towards the upside, right? The break of structure happened towards the upside, but on the 15-minute time frame, you guys are looking at this structure being broken. I'm like, okay, I'm taking sells. So why even look at the higher time frame in the first place? First of all, higher time frame is definitely more important, so you should be looking at it. But why would you do your analysis on the higher time frame if you're gonna go on the lower time frame and start looking for sells? Doesn't make logical sense. And that's what you guys have to start progressing into, is trading logically, because that's all trading is. Trading is a bunch of logics, right? That's technical analysis. That's what will get you far. So my key point here is that when you're trading the lower time frames, don't forget about your higher time frame bias and don't let these break of structures fool you, because this is where you're going to get faked out and lose a trade. So when you're looking at price and you see price break structure but higher time frames going bullish, be patient. Be patient for what? Be patient for if you are going to end up selling in that session, right? Still look for buys because it still makes sense to buys. This pullback is just giving you a deeper pullback, grabbing more liquidity for you guys to continue the price towards the upside, right? And give you more of a push towards the upside and give you a better range to trade, because all this move did was pull back to give you a better range to trade, right? And that's exactly what you want. So if we fast forward and see what happened today. So today, check this out here, right? On the 4-hour time frame, we were bearish, right? Mixed session here, we had bearish candles, right? But we didn't break any structure. There's no structure broken on higher time frame, and daily candle is still closing what? Bullish. Daily candle still closing bullish, so higher time frames going up. 4-hour time frame, yes, it is breaking down, but this is why we can say, okay, look, we can look for buys and sells. When we pop down to the 15-minute, look what happens, right? So we start breaking down, right? We get this big breakdown. We can't enter for sells in this zone, right? So now if we want to enter for sells, ideally what we want to see is we want to see some sort of pullback to continue. But since we know that the higher time frame is still bullish based on daily, if we get that change of structure, right? So the break of structure now, keeping the higher time frame bias like this, the same way I said to sell in this scenario, you need to break down again. If we get this here, we could continue up bullish, right? And this is a counter trend. It is considered counter trend because we have broken down in the session. But the difference here is that you're not taking the first candle that closes bullish. Taking a buy on this candle here is stupid. That's stupid. Why? Because you need to see price changing trend and respecting structure, right? So what do we see here is we end up, boom, getting this type of move here, and then we get this candle closing above. This candle closing above here is a lot of information. Why? Because we created a resistance here. Price is closing above the resistance, respecting the structure from yesterday-ish, almost respecting it. I would consider respecting it, no bottom wick around that zone, right? We can see the rejections, and then that gives you the move towards the upside, right? This is what gives you the move towards the upside. Because why? Because on higher time frame, no structure was broken. So everyone is trying to sell on this bearish candle closure here, looking for sells, looking for sells. Even when price got up here, people are still looking for sells because they think this is going to be a retest to continue down. Unfortunately, that's not how it works, right? It's not how it works because higher time frame was still bullish here. And what ended up happening? 4-hour candle closes with a long rejection towards the upside. And next 4-hour candle does what? Closes bullish. So after everything you've learned, to wrap up this video, if we were to continue down, you can see that our new structural point is this. You can consider this, but I'm considering this a zone. So if we were to continue down and sells to make sense, what we would need to see is we'd need to see a 4-hour candle rejecting from this zone and closing below the support, something like that. That's going to be the break of this structure and give you price towards the downside. So the key points of this video is to understand that break of structure on lower time frames is not as important as you think. Structure breaking on the 1 hour, 15 minute, 30 minute doesn't mean anything. It could just be a deeper pullback on the 4 hour to give you more of an option to take price towards the intended direction. So don't be fooled by all of this break of structure and trying to take these counter trend trades. Follow the trend. The trend is your friend till it ends, and that's as simple as that. So keep trading simple, guys. Don't overcomplicate, confusing yourself with higher time frame structure, lower time frame structure. Just focus on what makes sense in the session, right? So I hope this video helps. Nice, simple, clean video about why break of structure might not be that important, and a bit more into advanced break of structure and how you have to use it relative to the time frames you are looking at. So hope this video helped, and with that being said, take care, trade sharp, and so you leave, don't forget to leave a like and subscribe, and hopefully catch you very, very soon. Peace.